The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen. Thank you for being with me today. Good morning. Oh, Mickey D's with us. We are indeed honoured, mate, and it's about time we had another curry and a couple of beers, although I know you're off it, but I'm not. And so glad you can hear me all right. Anyway, it's good afternoon to our friends down under, or good morning for most of us this on the East Coast. Good afternoon if you're across the ditch in the Shaky Isles. So terribly important webinar today, folks. And just to cap things off, we've just had a notification from the NBN, which is the National Broadcasting Network, basically a government idea that turned into a total disaster. But they are doing maintenance on our section of the internet today, and we may lose internet for some considerable time. I've got the backup modem hooked on, and it is designed to cut in automatically if the main modem fails. But I have no understanding of technology, so therefore I have little faith in it. But this webinar, I think, is so important that if it fails for any reason, I will run it again tomorrow, Friday evening at the same time. And in any event, it'll be posted as per usual when we get it finished. So exciting stuff today, folks. Commodities, the gift to traders. And I have to say, I absolutely love it. It's a huge part of the market, which we don't talk about enough, but I'm very, very keen on commodities, and you should be too. Anyway, welcome to Albert Z. We've got an answer to your question here, Albert, which we'll be dealing with in a few minutes. Andre's with us. Anthony down in Sydney's with us. Benjamin, the retired pro golfer, is with us. Ben, glad to have you with us. David from New Zealand. These are all tutorial guys. Wonderful. David's with us. Hope it's all going well. Jen, glad to have you with us. Joe, of course, is here. Mark, Kay, he's doing a webinar at the moment. Let me know when you're ready for the next section of it. Mark L, Mickey D, I've mentioned. Let's see who. Oh, we've got a lot of people today. Michael's there. Murph, I'm sorry I haven't given you an appointment you asked some time ago. My apologies. I've got enough staff to do almost everything except do tutorials. I have to do those myself, and we've been swamped with them, which is absolutely grand. Next week, Murph, any day you like, pretty well, I think, except Monday. So let me know what day suits you and we'll get on it. Miles is with us. Monty G also asked a question about time and price squared. I've got an answer on all of that for you. Nathan's with us. Ned's with us. Peter Mack, who's not the short-term trader, is with us. Ray's with us. Rolf down in Melbourne's with us. And Steve is with us as well. Good to have you all with us, folks. So let's get on with it. So we're going to talk mainly about commodities today, but there'll be other issues as well. So let's get started here and hope the internet holds together. So you know that the Danielcode controls all markets, and we're going to show you a bit more of that today. Now, basically, it's easy to get distracted with all the wonderful things happening in markets, but basically the Danielcode is the business of making money. That's why we trade, and the Danielcode just gives you the greatest opportunities. This is a post from the website that I put up during the week. And at that stage, we were sitting at about 3 days of trading. I think it was Monday, Tuesday, Wednesday, basically. Was absolutely terrific. So you've seen that before. And for those of you who are new, and we've got a few, this is a post from a long-term Danielcode member. This is a gentleman called Greg Palladini. He's a very, very experienced trader and a wealth manager in Canada. And Greg came to his first, he joined the Danielcode in 2015, came to his first Danielcode tutorial, I guess it was in LA in 2016. And he's come back to do another Danielcode tutorial and learn about trading time, which is the big banger, as you can see from this stuff. So we know I've got a lot of you clients that are trading Forex. Some of you aren't doing so well, but you can see from Greg's statement here, that was his first take on trading time on Forex, and he's keeping us informed with some postings of how he's going with the tutorial, what he's learning, what he's finding out, and they're all posted in forum at the Danielcode website. And this is an unusual post because not only is Greg such a highly experienced and knowledgeable trader, but he's been very kind in allowing us to use his name, which is pretty unusual, and we certainly thank you for that, Greg. Okay, so we're going to talk about commodities and how to trade them. These are huge markets. I mean, commodities are great markets, and they're very good by and large with the signals. They're very clear, and once they start trending, all sorts of wonderful things can happen. And they do trend by and large, much more so than some of the other markets that we're obsessed with. So let's talk first of all to Albert and the rest of you. And Albert Z is a tutorial guy. He sent me an email asking if I would give him a short-term forecast for US dollar, gold, and T-bonds. There could be some fireworks this weekend with the Evergrande debt repayments. That's from Albert. Really good question, Albert. And the simple answer is nothing much. So no dramatic changes. Why do I say that? Well, for those of you who are not familiar with it, Evergrande is the biggest home builder in China. And China's economy is very, very dependent on home building. And there's been this quite incredible, if you haven't read something about it and seen some of the videos, the building of massive, massive high-rise apartments, and they're more than apartments there. I don't know what the mega word of that is, but they've just overbuilt with the greatest property boom we've ever seen. And it's extraordinary stuff, the number of apartments they've built. And Evergrande is the largest of them. And they're overbuilt so much, there are even videos on internet of them literally blowing up 12 high-rise apartments. I mean big high-rise apartments, extraordinary. And this is part of the transformation from a rural society to an urban society. This I'm talking to you about this in the webinar, Albert, because Evergrande was essentially a commodity play. Iron ore plus coal, metallurgical coal at least, equals steel. And that's the massive component in so many of these buildings. What's actually happened is that Evergrande actually defaulted a month ago. And there are two types of their bonds which are concerned. One are the onshore bonds. Those are the ones that have been sold to corporations and, more importantly, individuals domiciled in China. They're referred to as the onshore bonds. And the offshore bonds are to the rest of the world, a lot of which is Europe and United States, massively. But they actually announced the default a month ago, but the particular offshore bonds that we're concerned with at the moment, they have a grace period, and they announced the failure to make the payments of the interest, and they then have a 30-day grace period, which expires, I think, tomorrow. But the market's known about this for a month, Albert. It's been dealt with pretty well, if you like, already. And there's not a lot of uncertainty. What we know at the moment is that the offshore bonds are being defaulted on. they're now trading at about 15 or 16 cents in the dollar. And the onshore bonds, Evergrande, guided by the government in China, is maintaining those. They've made the payment on their onshore bonds. So the governor of the China Reserve Bank has made some statements, and the G20 as well, that they can handle this. It's not a Merrill Lynch moment. It's big. It's 400 billion with a B of debt. So it's big, all right. But the plan at the moment is to they're defaulting on, or have defaulted on the offshore bonds, but they will pay the onshore bonds, which will keep the local population reasonably happy. But it's a massive issue. It's certainly having a huge effect on the China residential property market. But it's been known for a month. Whatever problems they're going to be have been in the market now for a month. So nothing much is going to happen to change the trajectory of those markets you've suggested now that this stuff's been out in the open for all this time. Okay, so I hope that answers why there's nothing much is my answer to that. Okay, and then we had Monty G asked a question on time and price. And those of you who've been with us for a while will have heard me say, when time and price are squared, a turn is almost inevitable. And Monty's asking the question, if there's a TO3 signal on a time cycle, is that an example? Well, it can be, but you can also get time and price squared on the Danielcode blue line trades or on the TO3 plus signals. But essentially, the way I use the expression time and price squared, that's not an original naming. The great and very, very interesting W.D. Gann coined that expression many decades ago. But I was a Gann trader for many years. In fact, I maintain that I'm the most knowledgeable Gann trader in the world, which isn't really saying a whole lot. But for 12 years, I traded nothing but Gann. And I was really sucked in by it all. Any of you Australians who've ever heard of Bill Bowden will know of whom I speak, although I think he's died since then, so not to speak ill of the dead, other than to say 23,000 for a webinar, a tutorial, whatever you like to call it, up at Coolum. From Mr. Bowden, and that was after you'd paid $7,000 for the preparatory course. And I paid it, and I know some of you did as well. It's just absolute, can't use that bad word, but it was a real problem. Anyway, for 12 years, I should say, I traded Gann. I had people in London, San Francisco, LA buying me supposedly all these wonderfully original Gann letters and Gann charts, and I don't know how much of it was actually real, but it doesn't help at all, because the basic Gann system is there are people who love it, so I won't degrade them by saying what I really think about it, other than to say I don't trade Gann now and haven't for many years, but that was his expression, time and price squared. So it's my acknowledgement that I traded Gann for 12 years exclusively that I've used that expression, but we don't mean it in that way because we don't use any of Gann's methodology. So what it means in the Danielcode is that time is at a known and forecast time cycle expiration, and price is at a known and forecast Danielcode price level. And there are many time cycles, many price levels, but we'll have a look at the future slides where we show you some examples of that. And it's very important, because when you do get that set up, the probabilities of a turn are very high, and they're particular sorts of turns, aren't they? Because all trends in fact start with a turn and they end with a turn, if you think about it. So that's our preoccupation with turns, which we give to you on the TO3 plus, and our blue line signals as well. So right here, Monty, is an example of time and price squared. This is silver, and you can see that the 44 cycle got that low perfectly, with the low not far off 21.44, close enough to trigger a signal. And in that same sequence, 59 gave you the closing high of the rally, up to 2441 plus a few ticks. And of course, we've had a reaction to that today. Let me see here. With there's the turn that you can see there, just hitting the black line at 24.55, the famous Danielcode 89 line. So that's an example of time and price squared. I'll show you another one. I'm pretty sure I've got a couple more in here. This is a terribly busy chart, isn't it? This is time and price squared on copper, and you can see, looking across from left to right, you can see the 59 cycle gets that high in mid-September. The 62 moving along gives you the counter trend high. The red just gives you a continuation. Moving on to the next group of cycles, in fact, that'll be the same cycle. The 70 gave you the closing high, and the 44 gave you the bar before from a different cycle. Now, I put these time cycles on only to find highs, so that's why we haven't highlighted any of these cycles at the low, other than to show you there was target recognition on the price levels. So running up near the highs, you can see the 59 cycle, that gave us the high on the closing high was October the 15th. And of course, these time cycles are valid for plus or minus one period. And that's because of where they start the count from. They can start from either a chart high or low, or the closing high or low. So we always allow plus or minus one period on our time cycle. So that gave you the closing high, the 59 cycle, and then you can see the 62 cycle gave you that interesting counter trend low, which ran up to target recognition at the 473.65 number, which the market had already reacted to once. And you can see actually the close of that bar, which is October the 20th, Wednesday. That close was 473.45. What's the Danielcode number? 473.65. Not bad, is it? And then, of course, down it's gone. So that's two examples, Monty, of time and price squared. And thank you for your question. Okay, this is a Forex chart, folks. This is a bit out of sync with what we're talking about today, other than to say that, boy, Forex has just been fabulous, hasn't it? You know, I'm just think I'm looking through some of the trades we've had in the last couple of days. Boy, it's just been absolutely terrific. Right, so what we've got here is a Forex chart, but I put a post up during the week showing you some of these correlated trades. Now, if you've been with us for a while, you should remember that some markets are highly correlated, and they're so highly correlated that a trade in one can be executed in any other correlated market. That applies to the equity groups, Russell, Dow, Nasdaq, S&P, and Germany's DAX, and it also applies very much so for Forex. And this particular run up here started. Let me bring it up for you. started from either October the 6th or October the 7th, whichever you prefer. Depends whether you've done a tutorial or not, whether you're entering at the inside bar high or the previous bar's high. But this didn't give us a direct Danielcode signal, but we had correlations in Euro GBP and Euro GBP, and let me see what else we've got here. We had a stack of them. Euro GBP, we had GBP JPY, GBP Chief from Wednesday's signals, both elected. So sometimes, in fact, more often than not, these correlated signals that are a bit subtle, they'll actually perform better than the direct signals. And there's a reason for that. Markets hate anything obvious. Markets work best on things that are subtle. And that's one of the reasons why the Danielcode is so extraordinary. But you can see, there's a really simple, straightforward $3,000 plus trade simply from being aware of the correlation. So that particular trade was in Euro GBP, but the correlated signals were in, well, these are coming up to date now, right back in the day. We had Euro GBP, and I think it was Euro USD as well. We both had buy signals, and that minute that trade's elected, it's valid to trade the correlations. And as I say, as a general rule, they do better than the direct TO3 and plus signals. Okay, moving on, commodities. Look, there's so many of them, folks. Have a look at this. These are just markets that I've traded. Crude oil, natural gas, gasoline, they're part of the energies group. Corn, wheat, soybeans, bean meal and bean oil in the grains. Meats, feeder cattle, lean hogs, the old pork bellies, and live cattle. Metals, you've got copper, gold, silver, palladium. In the softs, you've got coffee, cotton, orange juice. Coffee appears twice, that must be because I drink so much of it. And also it was done at 3 or 4 o'clock in the morning. And sugar. So these are just markets that I've actually traded. And by and large, they're all very, very good markets. The meats are really interesting. The feeder cattle and the live cattle market. They can be a little bit patchy on volume, so make sure you check the volume on those if you're going to start trading them. But they are very, very good markets, and I'll tell you why. As a general rule, the more coverage that a market gets, the less efficient it is. So that's because you've got hundreds of thousands of day traders, and they're just following CNBC or Bloomberg or anything that's talked about. That's where they're trading. They think it's good. It's not, actually. It just makes that particular market more susceptible to the minor swings that come from news. But as an example, palladium, the margins got very big now. But back in the day when I started covering that in my webinars, it was the best market we had. It was absolutely fantastic. And it still is very, very good. But just a great trading market because it gets very little commercial coverage. In other words, the talking heads are not banging on about palladium, but they are banging on about equities constantly and bonds constantly. So watch the volume on the meats if you're going to trade those at all. I've left lean hogs in there, which is the old pork bellies, and I don't trade pork bellies anymore, and I'll tell you why. One memorable day many years ago, I was long pork bellies with a big position. I used to be a very big trader, and I had a sell on. And what happened, of course, this doesn't happen now. Markets are much more sophisticated and organized. But the next day my sell order didn't get elected because the market went lock limit down. Lock limit means that they'll put through one trade at a number that's way outside the allowable fluctuation set by the exchange, and you don't get filled. Well, let me tell you that pork bellies went lock limit down for either 21 or 23 days, and there was nothing I could do about it. I had my signals correct. I knew it was a sell. I had the sell order on. It just didn't get filled. So they've got rid of the name pork bellies. I don't know who it offended, but probably someone or other. And they've now called it lean hogs, but it's much the same market. And it's a very good market. I just can't bring myself to ever trade it again. And my revenge is that I try to eat as much bacon as my wife will allow me, which is not much, but at least I'm doing my bit in support of pork bellies. A couple of other ones in there to think about a little bit. Cotton and orange juice are both very subject to seasonal events. You can get flooding in the cotton fields, and with OJ, you can get a frost, which can wipe out massive parts of the orange grove's ability to produce marketable fruit. And that will happen during the night, the US night. And of course, the people who are in that business, who are growing it, they're well aware that frost is a killer. They've got helicopters overhead trying to keep the air moving so that the frost won't settle. But they've got short before you've even thought about it. And that's just a warning. Cotton, not so much now. The Mississippi's very, very well organized by the government contractors. But back in the day, it was subject to flooding and boll weevil and all sorts of other horrors. And we've got a couple of cotton growers, big cotton growers, as Danielcode members. So they know all about that and the history of it. Okie doke, let's keep going. So this is from the Gain Capital website, folks, Gain Capital. And this is their market list of margins. And they're very, very good. They keep it up to date very well. And I have found finding margins on the CME website an act of penance. It is so hard to actually get what you want. So keep this bookmarked, GAIN Capital Margins. They're very, very good. And of course, for all of these commodities, they have terrific record of keeping them up to date, and you need to be aware of that. Some of these markets can get very volatile, and margins can jump around quite a lot. Make sure you go to the various exchanges. Almost all of them are on the CME, but there are some sugar, US dollar index, not really a commodity, and coffee, which is a terrific trading market. They're on the ICE exchange. So make sure you go to the exchange, become familiar with the tick value so you can calculate the average true range, and also the trading hours of these various markets. So this is what you're sort of faced with if you want to trade a commodity. So this is natural gas with no Danielcode. And this is what most people start looking at and try to make sense of. And it doesn't make sense. The way markets move is really not in accordance with our literal brain. And they do move in a very specific way, which you're going to see. But if this is where you're starting from, you've got a lot of work to do, folks, before you can even begin to catch up. So have a look at this. This is the same chart, and I've added the Danielcode blue lines. So I'm not going to drive you mad with repetition other than to say this. Target recognition in the Danielcode can happen at the bar high low. If the market's going up, it'll be, of course, a high. If it's going down, it'll be a low, or the close. Both are valid. And put this up on your chart yourself. This is natural gas NG2. This is the front month. It just rolled over, actually. This is the November contract, just rolled to December. And just see how incredibly accurate this is. I've put on where the obvious DC target recognition levels are. You look at that on a chart. I'm not going to go through and tell you it was 3 ticks, 5 ticks, 7 ticks, and but I'd like you to do that, because you won't have an understanding of what's happening in the Danielcode unless you do that. And it's well worthwhile doing, folks. As you can see, the difference between using the Danielcode tools, which everyone should use. You don't have to trade the Danielcode methodology if you don't want to. I know a lot of you have your own ideas about trading, but whatever you're doing, this is the essential tool, the Danielcode members chart. Excuse me. And as well as that, for the markets, and natural gas is one of them that we don't display on the website. I do the work for you if there's a target recognition and the other elements that we require before a market turn. We'll put that up in our TO3 or TO3 plus signals. So about this time, people look at all these lines and start getting freaked. Well, let me tell you that you don't need to know anything about numbers. We do it all for you. If you can count to 3 and tell red from black, I can make you a super trader. But a knowledge of the probability of turns starts with the Danielcode ratios, and they are incredibly accurate. We say that to get target recognition, you have to have that specificity at the high or the close, or the low or the close, within 0.1%, not 1%, 0.1%. That's 1/10 of 1%. So it's 1,000th, to keep it simple. Extraordinary, isn't it? And markets do that all the time, and they've been doing it, as far as I know, forever. My research goes back to 1923, and I've never seen anything different. And on the Danielcode website, all the members charts, they're posted for you. You can see them in the members chart section, but they're posted a month after they automatically go into our chart archives. Have a look at it. There's over 45,000 charts in there that I've created since late 2008. You'll be hard-pressed to find a market that's ever turned anywhere except at the Danielcode numbers. And that is literally in the high 90% of statements that can be verified. And you can verify them yourself by going through the Danielcode chart archives and see what made these markets turn. And you can see what's made natural gas turn. It's right there. Target recognition. One further bar down. These signals are valid for different times depending on the type of signal. But the TO3 and TO3 plus signals basically are valid for 2 days, including the day of posting, or the day that you see the target recognition occur. And the blue lines are valid for 3 days. And you can see why if you follow that through in some detail. Okay, so let's have a look. This is this part of the chart, still natural gas, and I've just zeroed in on a section to show you. This is the first pullback from the recent high. And look where I put the notes for DC target recognition. Look how absolutely amazing they are, how close they are. I mean, it's extraordinary stuff. It really is. So I beg of you, take the time to put these numbers on your charts and look for yourself. What's that variance from target? It's a handful of ticks, that's all. It's not even as thick as a hair. And this happens again and again. In fact, it happens all the time, to my knowledge. That's what makes markets turn, are the Danielcode ratios. And if you look at this closely and just work your way down from the highs bar by bar, markets are actually trying to talk to us. They're trying to tell us what they're doing. Until we had the Danielcode, we didn't know the language. We didn't have the language to talk to markets, to understand what they were trying to say to us. but it's a reality. Have a look at the rundown from the recent high. One bar down gives us nothing. Next bar down closes just a handful of ticks away from the 5.404 line. Rally back up. Open comes right at the Danielcode number at 5,892. The low of that bar, right at the red line of 5,537. Next bar, that's target recognition. That's the market's way of saying to you, I know these numbers and I'm tracking them. Next bar, straight down onto the 5305 number. Exactly. This is Danielcode target recognition. That's what causes the rally. Back the market goes. Up it goes into the high. 5.963. Now that's a Danielcode retracement on the pullback, but it's still working, you can see, on the other side of the market. We should have a different set of retracements from that swing low up into the 5963 high, but it works just the same. Just works the same. Market rallies up, the big bar, hits that, stops like it's shot, down it goes. What happens with the next bar? Close and the low right down at 5404. This is the market's way of saying to you, I know these Danielcode numbers and I'm tracking them. Next bar down, and it low at 4953. All these numbers come straight out of the Danielcode tools. If you're subscribed to the Pro service or you've done a Danielcode tutorial, you've got the Danielcode tools. You should use them. Look what happens next. Little push down. There's the low. I haven't put the DC target recognition sign on the low, but it's a handful of ticks, I can tell you. And then 2 bars up today. So markets are trying to talk to you, but until we have the Danielcode, we didn't have the language. We can now see how the markets work, what causes the turns in markets, and then we have other tools that tell us what their likely targets are, etc. But that's the most important thing about the Danielcode, is these Danielcode price levels. I'm not even going to talk to you about time, but except to say that these price levels that you're looking at, the red lines and the blue lines, are actually time cycles. When I discovered the Danielcode, that's what I found, time cycles. That's what I was looking for, and I found the Danielcode time cycles. And this is how accurately they contain markets, using those exact same time cycles as price levels. And that's because time and price are the same thing on different axes. In other words, price goes up and down on the x-axis, time moves across horizontally on the y-axis. Okay? Most vital thing you can know is that markets are trying to talk to you. Once you understand the Danielcode and get that idea through to you, the market becomes your friend. Instead of being an instrument of fear or trepidation, it becomes your friend. And it gives you, well, gives me, I tell you, tremendous joy and happiness. I have excitement and anticipation of what the market's going to do. I know that the orders that would be created with the Danielcode, if you've done a Danielcode tutorial, you know what I'm talking about. And in particular, this is price you're looking at, folks. The time cycles and trading time signals is even better. You'll never miss a turn on any market. Extraordinary, isn't it? But it's there, it's true. You just have to find us. Do yourselves a favor or do your friends a favor, tell them about it. So what is the Danielcode for our new friends? It's basically a series of time cycles that we use both time and price. And we have major time cycles that we use for long-term charts and forecasting. We have minor time cycles that we use for trading time. Now, you won't find anything about trading time on the website. If you'd like to learn about how to create and trade time cycles, you need to do a Danielcode tutorial. And to access that, you simply send me an email telling me you're interested. I'll send you some paperwork. You can read through it, see what it all encompasses, And if you really do aspire to be an elite trader, you should learn trading time as well as trading price. Okay, so here we are. Always accurate, less than, equal or less than 0.1%. This is the NZD-USD. It's not a commodity, but I put it in here because I'm trying to show you this theme that markets know and understand the Danielcode. Have a look at this in the rally app. Find a chart so I can give you some dates. You can look at this on your own charts and say, well, what did I have? Well, what you didn't have was this. And so I've started this just to keep it simple on the October the 15th date, and that high was 70.78. Look at the Danielcode red line, 70.79. Let's move on to the next bar. Close of the next bar, remember, target recognition is valid at the bar high low or the close. Close of that bar, 70.88. Where's the Danielcode blue line? 70.87. One tick variance. Move on to the next bar. This is October the 15th. We've got target recognition. The close of that bar, 71.51. The Danielcode price level, 71.49. 3 ticks variance. The final bar before today's price action was Wednesday. This was done Wednesday night, early hours of Thursday morning. The high of that bar, 72.09. What's the Danielcode blue line? 72.08. 1 tick variance. Now these charts are published well in advance. Some of these numbers have been on these charts for weeks. Some have even been on them for months. But we update these charts normally twice a week. They're done on Saturday and Sunday and Wednesday. But they're always updated. If we have instances like we had earlier this week in silver and something else, what was it? Let me see. Can't find it offhand. 2 markets. We had to update the signals on Tuesday night. Fine. If necessary, I'll update them every single day. You will always have in members' charts the charts which showing the future prices. That's what you're looking at here. But also what you're looking at is the market talking to you. In other words, the red line, a number of those groups of blue lines have defined this market perfectly within a handful of ticks. And this happens all the time. So, it's a very different scene to what many of you think trading is about. And it's the market's way of saying to you, I know these numbers and I'm tracking them. This is sugar. I've done the same thing on it. Target recognition. Try to keep this as short as I can, but you'll get the idea very quickly. And you can do this yourself. Put these numbers on your charts and just follow them yourself. There was the high, which was October the 11th, Monday. The high of that bar is 2061. Where's the Danielcode blue line? 2061, 0 variance. First push down, the market starts to come away in accordance with its blue line or TO3 signal. The first day down, the close of that is 2007. Okay, where's the Danielcode red line? 2009. You remember? Let's move on. Some of these numbers have changed depending on what day of the week they were done and what were the bars on the chart. But basically exactly the same. The next bar down, the low, 1983. Where's the Danielcode number? The red line, 1983. Wow, 0 variance. What about the next bigger bar down? The close of that bar, which is Thursday's, of last week. The close was 1959. Where's the Danielcode red line? 1949. 10 ticks variance. Okay, getting out there, isn't it? Little rally up, finds the 1999 number, stops a few ticks short, often does that to tell you it's weak. Next bar down, the big bar down. Here's the close. Danielcode number was 1935. What did that market close at? Oh, 1935 on Monday, October the 18th, a zero variance. What about right down to the blue line? Oh, what's the low of that bar? 1882. What's the blue line number? 1883. Do you get the picture? This happens all the time, all the time. If you know and understand trading the Danielcode, it's a source of enormous excitement and it's a thrill. And your mindset will change as you get better from apprehension, worry, who's after my stops, all that sort of stuff. You'll be at peace with yourself. You'll know what the market's going to do. You won't know which way it's going to go necessarily or how far it's going to go. These signals are mute on quantum, but you'll know that it's going to turn at and only at one of the Danielcode numbers. And if you don't have access to those numbers, you're missing the greatest methodology in trading, bar none. So what I've headed this slide is simply saying dramatically improve your trading by knowing these price levels in advance. That's extraordinary. Why wouldn't you? I mean, you should be, cutting off your left arm to get these price levels. And they are just truly fantastic. This is Soy Beans, and it's going to tell you the same story. Look at the rally up since the low. The low came in, the target recognition of the low was on October the 12th. 1 bar later, you got the low. What was the close of that low? 1195, correct 2. That little arrowhead figure is called a correct. And this market moves in quarters. It goes correct 0, 2, 4, 6, next number up. So 1233, correct 4, the next number up is 1223, correct 6, and then 1224, 2, 4, 6, 0 in quarters. Why is it done in quarters? Because of the rule of eighths. You will learn about that when you do a tutorial. Let's have a look what this market said to you on the way up. We got the turn. That was fine. Let's see what happened. Starts to move up. Here's the first day, Friday, October the 15th. Gives you target recognition at the high. How does it do that? The high is 1221, correct 0. The Danielcode red line, 1221, correct 0. Okay? That's been on there for 2 days. From the low to a relevant high. What about the next day? This is Monday, October 18. Where do we get target recognition? Not at the high, you get it at the close. What's the close? 1221, correct 4. Where's the number? 1221, same number, 4 ticks variance, that's it. What about the next bar up? It legs it up a bit, has a bit of a weak close, runs away from it at the end, doesn't it? But the high of that bar is 1239, correct 2. What's our number? Red line, 1239, correct 4. That's 1 tick, folks. 1 tick. And there's potential 8,000 ticks in that number, if you think about it. What about the next one up? I haven't marked it on that chart as target recognition, but it was. The close was at 1245, correct 4. What was the number we're after? Well, the red line was at 1246, correct 2. Okay, we're showing about 3 or 4 ticks. Extraordinary stuff, isn't it? Okay, I won't belabor that other than to say I should belabor it. You should be going nuts over this. You should be putting all of this on your chart and saying, the market is telling me I know what you're doing, I know these numbers, and I'm tracking them. Extraordinary stuff. This is silver. Same thing. I won't drive you mad. Go through and do it yourself. Put these numbers on your chart. put your have a look at the variously the close or the high or the low if it's going down. You've got 1, 2, 3, 4, 5, 6, 7, 8 charts there other than an inside bar, and I promise you I won't drive you nuts anymore, except for those of you who haven't been watching. Look what happened today. Key reversal bar. The high was 2455. Now, this is a market that moved, a tick is a half a point. What was the high? Today's bar is not on that chart, but I can tell you that today's high turned at 24550, and the Danielcode black line 2455.5. In other words, one tick variance at the high. Market is saying to you, I know these numbers and I'm tracking them. It's there for you. I do these for you 3 times a week, sometimes more often. It's the most valuable tool you can have in trading. In fact, how you can trade without the Danielcode numbers and the Danielcode price levels, I don't understand. That was the difference to me between being your usual trader, make a bit, lose a bit, to becoming a master trader. Knowledge of the Danielcode, which I'm trying to share with you. Okay, move on. Markets are trying to talk to you. Have a look at this busy chart. This is copper. Every significant high, every significant low is coming at a Danielcode ratio. Target recognition on the blue lines, target recognition on the red lines, which are the retracements. The red and black lines are retracements of previous ranges. The blue lines are extensions of the ranges, of previous ranges. And often, those of you who've done a tutorial will know this, we'll see these price levels overlapping each other, very, very close to each other. So you might have a 29 retracement overlapping a 74 retracement from a different swing, because all these numbers are created by the market themselves. These numbers are the market DNA. They're created simply by applying the Danielcode ratios to market prices. In other words, the market is creating these levels itself. And often enough, you'll get 2 or more a price level overlapping. Why is that? Well, it's how markets work. All moves on all markets are fractals of previous market moves. And you can prove that to yourself by putting the Danielcode red and black line retracements on different swings on a chart, and you'll see that some of them will overlap. That's a function of the Danielcode, but it's created by the market itself. Okay, coffee. You want to trade coffee? One of the best markets we have. This is what you see if you don't know the Danielcode. What does that tell you? Well, not a lot. Somewhere near overbought, you get a high. Somewhere near oversold, you get a low. Sometimes it's just nowhere near where it should be. And sometimes it lasts a lot longer. As someone famously said, the market can stay overbought much longer than you can remain solvent. For all you guys who want to get short in a hurry, that's what happens. Let's see what this does. What you were looking at before makes no sense. Means nothing to me. Means nothing to you. You know the engineers saying, if you can't measure it, it doesn't exist. Or if you can't measure it, you don't know what it is. Well, that's absolutely vitally true about trading. If you can't measure it, you don't know what you're looking at. Look what happens when you start putting the Danielcode ratios on. DC target recognition, DC target recognition, DC target recognition, on and on and on, of the highs and of the lows. This is coffee. Wonderful trading market. Look at it. Within a handful of ticks all the time. And I think we can actually see some more out of this. Here it is. This is a blow up of a retracement in coffee in September this year. You get DC target recognition at the blue line at the high. Wonderful. There's your turn. Look what happens going down. Now, these are not Elliott wave numbers. We have nothing to do with Elliott wave. those of you that have had some exposure, I'm sorry for you. I too had some exposure and had to learn the lesson, which is, well, here's a simple lesson. This is a 5-wave structure, but it's a correction. So no, shouldn't be there, should it? Doesn't matter. These are not Elliott wave. I put the numbers on just to show you the sequencing of target recognition. Market starts to move down, hits the red line at 191.10, rallies. Where does the rally go to? Red line at 197.30, plus a couple of ticks. Down it goes, a big one down. Look where it closes. Look where it closes off the low. Look at the low. Hits the 188.20 line, less a few ticks. Look what happens with the next bar. That wasn't really accurate target recognition, was it? Look at the very next bar, the one with the number 3 underneath it. Look at the high and the low. It's running right between Danielcode numbers. There's its high, 191.10. There's its low, the other ratio, numbers on the left-hand side of the page, 182.85. How accurate? 2 or 3 ticks. Extraordinary, isn't it? Then you get the next little low, little break through the red line, and you get the rally up to level 4. Got the number 4 above it. Where was that high? 189.85. Down it goes. Level number 5. What's that low? 182.05. Handful of ticks. Target recognition. Markets are talking to you, but you're not paying attention. Markets are trying to tell you constantly, we know and we're tracking these Danielcode numbers. You can understand that. You'll have a totally different take on trading markets. Okay, let us move on. I know I've taken some time with that, but you will make this progress with the Danielcode. You'll start off ignorant, scared, searching for knowledge. Where would you find knowledge on trading? What would you find? Well, I can tell you I've been through that battle. I spent years and a not so small fortune traveling around the world, going to tutorials and seminars. Any of the big names you can think of, I've been there and I've learned what they had to teach. And they all had the same problem. I certainly wouldn't disparage anyone. There's some wonderful people in the industry. There are also a lot of deadbeats who don't know what they're talking about. But the reality is I could never find a trading system that made enough money to give me a nice, steady, upward-facing equity curve. And that's why I had to find the Danielcode. And I went on a search for the Danielcode. And I spent years and years and years to find it. And I've now spent years and years and years knowing and learning more. And you guys who've done a Danielcode trading tutorial, you know everything I'm talking about. So what you're seeing here are just the Danielcode price signals. Progress to understanding, certainty, eventually peace, excitement, joy, and happiness. You will, I promise you. That's the journey I've made. I love trading. I've always loved trading. But let me tell you that losing money when you're trading is a total pain in the butt. Making money on a regular basis is fantastic. That's what puts your life into context. So I can ask you, I can beg, I can implore you, whatever you like. Learn this stuff while it's available. It's unbelievably brilliant. And we've got, as you know, hundreds of testimonials about it. If you're after understanding, certainty, and eventually peace, excitement, joy, and happiness, this is what you do. Start learning the Danielcode. If you want to go further, you can start by using our various Danielcode signals and programs that we have on the website. If you want to go further, do the Danielcode video tutorial. Learn how to create and trade time signals. That's the last frontier as I know it. You will literally never miss a turn. Literally. Bit of a statement, isn't it? That's how good it gets. Okay. Finally, near the end now, folks, I have put up here a chart of the S&P. Trade the market. I know we've been looking for a top in the market. The fourth seal thinks the top is in. But trade the market. Don't go short just because of the forecasting. The forecasting's done on a 6-day chart or a 12-day chart or a 24-day chart. What you're trading is a daily chart. This is a daily chart. The last buy signal, TO3 buy signal, look what it's given us, $8,300. Nothing massive. It's very nice, isn't it? Long. You may have a view long term about what the market may or may not do, but what you must do is trade the market. In other words, if you've got a buy signal in equities, for goodness sakes, take it. Okay? Really wanted to impress that on you. If you want to take all this further, you can start by just going to the Danielcode website and have a free trial, and then decide which of the programs we run you'd be interested in. You can subscribe to those. And if you want to go further, if you want to seriously become a very good trader, do the Danielcode tutorial. It covers for Forex and futures. A lot of people try to tell me that Forex and futures are different. They're not. Forex and futures work exactly the same on the Danielcode. They're only different because people don't understand markets. So there we are. Okay? Here you are. I will make you a super trader. Don't get panicked by the numbers. If you can count to 3 and tell blue from red, I can make you a super trader. Send me an email, jneedham@thedanielcode.com, and I will send you some paperwork you can think about. I'll call you on the phone to talk about your particular interest if you like. Remember, the business of trading futures and Forex is not to be right. The business of trading is the business of making money. That's what we do. If you haven't already, folks, please take a free trial. Just go to the Danielcode website, www.thedanielcode.com. Click, just hit the register button. Any problems, and if you've had a previous free trial, the market may remember you and not want to let you in, but contact Terry at support@thedanielcode.com. He's our IT guru and manages the website, and he will be happy to assist you. That's pretty well us for today, folks, except for the disclaimer. And it's easy to say there are a lot of typed words there and it all looks like rubbish. It's not. It's truth. It is very, very easy to lose money trading futures and Forex. Once you know how to trade, it's equally easy, in fact, easier to make money trading futures and Forex. But I counsel you, I beg you, I implore you, do not use real money trading until you are confident that you are a competent trader. And the best way to become a competent trader is to get the Danielcode tools, or if you want to be an elite trader, do a Danielcode tutorial. Okay, so we just have a few questions here. Murph, see you next week. Well, mate. Akshay wants to know the outlook for bonds. Outlook for bonds, Akshay. Let me see if I can give you a quick answer to that. Here we are. Looking fairly negative, and they're at vital support right now. And that support is at 157 correct 1. 157 correct 1. If it breaks that on a closing basis, bonds are probably going much lower. And that's what we have. So, folks, I hope you've enjoyed today, and thank you very much for being with us today. I can tell you it's a great pleasure having had you, and I hope you can get as excited about trading markets as I am. And that's us for now. So all the best. Enjoy your weekend, and I look forward to seeing you at our next webinar. Goodbye for now. Good, Ray. Good to hear from you. Murph has left. Anthony, thank you. Always delight to talk to you, my friend. And you're free from lockdown as well. Or you could come to Queensland. We've been having a really good trot. Ray, again, thank you. Cheers to you. Bye-bye for now.